Welcome back to All Things EVM, where we talk about passive income strategies in the crypto space. Let's get on into the farms of the week. So last week was actually a little bit of a low week as far as volume goes. The market corrected in general. I saw actually a lot of profit, which was surprising. Some of the plays that I've been sitting in played out really well for me, but this all happened really over the weekend. And so I was actually down in my total profit for the week until the weekend where things started to pop off. But I'll get into each one of these farms individually. Now, at the end of this video, guys, make sure to stick around because I'm offering a couple of different opportunities for those of you who would like to copy trade this or at least learn how to get into yield farming itself. So stick around to the end of the video to check out some of those offers. But let's get into each one of these things and kind of how things played out through the week. This might be a long one, guys, so stick around and hang out. So I started the week just like the week previous with this Extra-wETH Farm. This is on Extra Finance. That's on the base chain. Extra has fallen in price over the last week and a half. I think I started this pool out with $1,500. It's lost a cumulative of $450, but that's only from the price action. And I'm heading towards, as I'm farming this, I'm heading towards my entry price. Now, I do expect this to go up, and that's why I've stuck with it, guys. I'm getting a 1% return every single day. It's $1,400, $1,472 currently, so about $15 on the daily. And this is a long conviction play for me. I do think we're selling the picks and shovels, if you will, in this market on base with the Extra-wETH pool here. And this is a leveraged pool, so do be careful with these. You can do this either leveraged or delta neutral. I don't recommend doing the delta neutral strategy on this one in particular, as the price of Extra could run and has run really quickly. And so if you do the delta neutral option, you're actually asking for your position to get wrecked because it's going to run a lot faster than you might think. And if it doesn't go down, you're not going to make money. If you do the delta neutral situation, if the price goes down, you typically make a little bit of money. If the price goes up, you could get wrecked on your borrow position. So just look out for that, guys. This one's a little bit more speculative, but I do think this is going to be a long-term play for me. I'm expecting the price of Extra to go up. Let's go into Extra on Deck Screener here. I started this pool actually as delta neutral, and it actually ran away from me and has come back into a place where if I had left it as delta neutral, it may have worked out. But by the time it got up here, I was starting to lose money, and so I got into more. I started paying off the debt that I had borrowed in order to make it delta neutral, and then it came down. And so I ended up pretty much even for this pool, but I'm still accumulating Extra essentially in this pool. And I do think we could see this run up again to the 30-cent range, which would be essentially at a double up from here. So that's why I'm holding this. And I do think this is going to turn out well over the long run. Base has been getting extreme volumes and seems to be the place to be as far as the current narrative goes. I think Coinbase in particular is going to onboard a lot of retail into the space. So if we're holding Extra and people are using Extra to leverage their positions, and the more that the fees that they're going to make, the more the Extra token is going to go up, and therefore I'm going to stick around with this for some time. Not a huge investment for me at $1,500 essentially. I think I'm at, yeah, $14.12 is where I'm at currently. And I'm going to stick in this, and this is probably something you'll see on a recurring basis. So I don't need to get into too much detail in the future. Now, neadCleo, I've mentioned this before. This is where most of the profit came from last week. And this is a position I've been holding for some time. I think if I don't want to get too in the weeds on this, as neadRAM is the backing protocol on this. It started in the Ramses exchange on the Arbitrum network, and Ramses has expanded to various different chains. neadCleo is on the Mantle ecosystem, and Cleopatra DEX, that's all included there. neadCleo is basically a liquid wrapper for the CLEO token, and you can stake it so you don't have to vote in order to make those returns. Currently looking at 115% APR, so not a huge APR there, but guys, what I'm looking for is an arbitrage opportunity here. neadCleo is roughly half the cost of CLEO. I think it's at like a 0.6 currently as far as, ratio from CLEO to neadCleo, where I do think this will come to peg at some point, and that's what I'm sitting on. In fact, I'm highly believing in and have seen some fruit from CLEO and Ramses and all these different exchanges, all these VE33 dexes really coming into some great price action, especially after Aerodrome has run up and Velodrome has run up. In fact, the guys at Velodrome, one of the co-founders is an advisor for the Ramses ecosystem, which includes CLEO, includes Nile, and all these different applications, which I will talk about probably throughout this bull market because I believe that they're going to do super well. Now, next up on the list is veCleo, and so I do have some locked voting escrowed CLEO tokens. I'm going to be reporting on my earnings there. I've got a rough estimate of 200%. I do expect to triple up on those positions over the next year, but I do think that's kind of an understatement. I'm adding these to the farms of the week because I do think these are viable opportunities in the kind of DeFi flywheel space. I'll probably make some individual videos for the VE3 dexes as these tend to run pretty hard in some high volume cases. So the more volume, the more the protocols that are underlying want to bribe on their votes, and the higher the bribes, the more rewards that you get as an LPer and as a voter. So RAM is the same. I've got a little bit more RAM than I do CLEO as far as the VE goes. And those are, again, are voting escrow opportunities. They're max locked, they're 4-year locked, so they are locked positions. I can't get out of them. They're not liquid. And so they're very small in relation to my whole yield farming portfolio because they are locked. But I do intend for them to grow, and because they're 4-year locked, guys, I'm looking for them to be a factor in the next bull market as well. So I can either continue to lock them up for 4 years continuously, and their voting power does go down as we get closer to that 4-year mark. Something to understand about that, but in general, I'm going to be probably cashing out my rewards rather than locking some rewards, but I do want to make some educated guesses and see if I can outperform some of my other LPs with those VE positions. So that's where they're in here, guys. They're more of a test market to see which one is going to outperform, see if the voting escrow positions are going to outperform my LPs or vice versa. So next up is Nile. Nile is brand new to me. Apparently it started in January, and I wasn't aware that there's several other pieces of the ecosystem. Ramses has been around on Arbitrum for over a year now, and then they've expanded to the Mantle ecosystem with Cleopatra DEX, and now they've got the Nile DEX on the Linea chain. So a couple things with this is a great APR pool, ETH to USDT, making me 782% right now, which is fantastic on a pair that I love to trade. ETH versus USDT, I would trade all day long, especially over, something over 365 APR. This is on a relatively wide pool of about 5% on each side of the price, and so I can hopefully hold this for a while. In fact, I already the price of ETH went over the top of the trading range in my pool as of this morning. I just redistributed the LP to make sure that I continue to make that 700%. It was great for me yesterday. In fact, I pulled in just under 1% yesterday, and I started that a little bit later in the day. So I'm hoping to make at least 1% a day, but right now it's looking closer to 2%. So let's actually go into that one and just check on the APRs. That is Ramses, this is CLEO, and this is Nile. So Nile currently at 898. Fantastic. Let's refresh this just to make sure that's still the case. Calculating, yep, 898. Should be a great pool for me today. Already made $15. And I think I just changed the LP on this about 3 or 4 hours ago. So as long as the range holds overnight, which it looks like it might, ETH is on the higher side. So let's jump into this and show you a little bit more detail here. ETH is pushing up pretty well today. I think we're currently at about $3,700 per ETH. So if that goes above 3,750, I'll be out of range. But I'll even, if that happens and then before I go to bed tonight, I can even jump in, rebalance this, and continue to make that 800-ish to 900% APR, which is going to give me a solid 2% on the day if it stays there. So that's pretty awesome pool. I'm happy to have found that on Nile. Again, Nile's on the Linea chain. The great thing about this is we're actually accumulating some points for the Linea LXP rewards as well. So there's an airdrop on top of that that you can take advantage of. So I highly recommend getting into Nile as a yield farmer as you're farming points as well as APRs. So let's get back into the list here. Next up on the list is the AERO-USDC that we've been in for the last 3 weeks. Now this I've changed to Beefy rather than Extra just to keep it super simple, guys. Beefy auto compounds the rewards. This position on Beefy is currently making 0.68%, which is a touch low for me. I would love to see 1% in this market right now. I'm holding on to this as I think AERO is going to run, guys. It's already up quite a bit today. Yeah, we're at almost all-time highs, but I do think this the market is going green right now, and I do think we're going to see this take another leg up, possibly up to $2.50, even $3 per aerodrome. So what I'm not making in the yield, I'm making up in the price of the underlying. So though it's paired against USDC, so I'm only exposed to 50% of the underlying as a full range yield farmer in this, I'm excited to be able to continue to hold on to this position, and I do think it will outperform any other high APR LP that I would be in rather than this. So that's why I've chosen to stay in it. In fact, let's look at how much I made this week versus last week. So I'm up 36. I'm up to 3609 right now, where I started with 3,000 last week. To make $600 on a $3,000 position, what is that? That's a like 20% return in a week on one position alone, and can't beat that. I'm gonna give up on yield in favor of gains on a regular, guys, because I think growing your pool is just as viable holding tokens as it is with getting the rewards. In fact, just to show you, I actually did not compound any of my the rewards that I took out. So my weekly rewards were only $710 overall, where the previous week I took home $1,300. I do pay myself a little bit from my crypto to make sure I feel like I'm taking gains here and making it worth my time. So I do separate those profits. Anytime I put in this profit number here, it's money that I'm taking out of my yield farms in the long term. So, and not compounding. Now, last week I compounded $359. In this week, I'm only compounding $10. But look at the profits, guys. I mean, I started my journey here just a couple weeks ago with just under $20,000, and currently I'm up to $25,000 as far as the funds that I have in my yield farming portfolio. So it is growing, and I'll take gains in the token over yield any day, especially in the bull run, guys. I think it's the most important time to keep funds in and really go after those high conviction token plays. Now, taking an income is great and it is necessary, but as long as I'm hitting my goals in that regard, my goal is to stash about $1,000 a week away. So I did that really well between these 2 weeks and just got over $2,000 there. And I hope to do that again this week. But if I can take gains in the tokens, I'll take it all day long, because that's just going to grow my stash and grow my rewards in the long run. All right, so up next we have this mantle to mantle ETH Timeswap position. Now this was single-sided when I put it in. You do have exposure to both of these assets in this pool, but this just continues to grow for me. This is another one where it's all about the underlying token for me. I think the mantle price is going to continue to go up. Let's look at mantle real quick here. We saw another all-time high on mantle this morning, jumping over $1.50. It's retracted a little bit from here, but as soon as the market starts kicking up, I do expect to see this go to, $2 really at some point in the near future, guys. I think mantle is undervalued. I think Mantle is the next DeFi space to get a lot of TVL. Similar to Arbitrum, guys, there's a lot of forks from Arbitrum moving over to Mantle. I think a lot of DeFi natives are going to live on Mantle, and I think that's why I'm going to hold the Mantle token. And also with the current options where you can stake Mantle to make Mantle, you can stake Mantle to make ENA tokens. There's all kinds of different staking rewards going on. mETH is a big factor in this space because it has underlying eigenlayer points for airdrop stuff. There's just so much going on in the ecosystem right now that holding Mantle just makes a lot of sense for me. And so even though I'm making only like $7 a day on this pool, which is fairly low in regards to what my goals are, I mean, it's a $4,200 position, only making, making 111% APR. What is that per day? That's like so low. Let's go 1100 divided by 365. You know, it's a 0.3% per day. You know, it's pretty low in comparison to everything else that I'm looking at here. However, guys, I think it's a great position to be in. I'm going to talk about that a little bit more with the wSOL position that I have down the list here. But I think in general, these big conviction plays are going to play out long run. They're going to play out in my favor in the long run, and that's why I'm holding on to them. Now, the SOLC-SOL position on Orca did come back into range, guys, just at the end of the week here. It was out of range all of last week except for on Sunday, and I do expect to make returns on that. Now, the Solana ecosystem has been super laggy the last week. I think it hit some serious bottlenecks as far as traffic goes, and it's been really, really hard to interact with. In fact, Orca has been really rough to work with, trying to redeem rewards, trying to get out of this position. In fact, I tried to leave this position in the middle of last week, and I just couldn't even get out of it. I tried like 3 times, and it failed. So I do know of others in this space that are using Orca and doing well. So I continue to have some faith in this. Now, it's a small position for me. I think originally put in like $800, like the 783, I believe was my entry on that as far as principal goes. So I am down a little bit on this, and it's frustrating because I should be making about 3% a day on this, but it is sort of one of those positions where it's a riskier position. So I put a little bit of money in, and I'm just hoping to get some decent rewards. 1,241% on this, which you know, is probably 3 to 4% daily, right? But I'm stashing those rewards, and I'm recompounding, and I'm hoping to bring this back up. I do have some convictions about the SOL-C token, as I think it could be a runner, especially if Solana can get their act together and start, you know, decongesting their chain right now. It's just so hard to use. In fact, I think this W to SOL position on Meteora. Now, this W position was airdropped to me last week, so this is a full-on a new addition and definitely plays into this $25,000 pool that I'm using now. It was a $3,500 airdrop direct to my wallet. I used the wormhole bridge to bridge from the EVM space to Solana, and that's why I got that token. Now, guys, don't fade this. There will be a season 2 on this at some point later in about 6 months, 5 to 6 months. We should see a new airdrop for this. So if you're bridging for EVM to Solana, make sure to use the wormhole bridge. There's a couple different applications that use that. I believe Portal Bridge is one of the main ones. I've used a couple others as well. But keep farming that, and you should get some W tokens at some point. But that was a huge addition to what I'm able to farm with, and I'm excited to be able to use that now. I do think the W token will rise up again. I lost $500 already in this position because I think not only is Solana being slow right now, as I mentioned about the SOL-C to SOL position on Orca, but I think I think it came out of the gate a little hard, and I think when staking is available for the W token, we should see the price rise back up. It's currently trading for about $1, and I think it launched at about $1.50. So we're looking to get back to that $3,500 to $4,000 range before we exit this pool. And through the process, I'm going to be making gains. This pool did start out at about 2% a day for me, and now is all the way down to only 73% APR. But I'm starting to compound the rewards. Check this out, guys. I'm taking my rewards out of this. So this is Meteora here. This is my main position, but anything that I've earned here, I'm starting to put into a new pool that has a tighter range and a higher APR. I've got the smaller position from some of the rewards that I'm compounding. I've got it in a smaller, tighter range as far as the concentrated liquidity goes, and a better fee for the user actually. So I think that's why we're seeing a higher APR here at 0.83% daily, where this is only making me, my current position, my larger position here, is only making me 0.16. Now, why would I keep it in here at the 0.16 range? Well, because it's almost all in W tokens right now. Let's look at the position here and show you what part of the range it's in. It's at the bottom part of this concentrated liquidity range. I don't want to take it out of this range until it gets closer to the middle, especially since it's a nice wide range here. It's going to capture a lot of fees over the long run. It's going to also convert slower from W into SOL. My initial thought on this is the longer it stays in W tokens, the more price appreciation I can accumulate out of the W token as it moves into Solana. So because these are two unrelated tokens, as far as, SOL is at, roughly $182 per token right now, where W is at $1 per right now. It's hard to quantify exactly how many SOL, at what price this is going to transition out, as they're both moving against each other. None of these are USDC or, a stable coin. So right now we're just holding on to this, hoping that it transitions to SOL over the long run, and that I basically dollar cost average out and take profits in the process. So again, I'm going to take any profits that I make, any of these underlying accumulated swap fees, I'm going to be putting into that smaller pool back here and getting a higher APR on the rewards, which I just think is a good strategy for what I'm doing right now. Make a little bit more rewards on what I've already made in rewards. Now that's the last position that I have listed here currently. Now down here I've made a list of a couple pools that I want to look into over the week, guys. I've done some research and looked into, some of the risks and reward profiles of these different pools. Now there's an RETH to ETH pool on Ramses that's making 700%. In fact, I did jump into it with a very small position just to test it out. And then there's an ALETH to AL-USDC, and that's Alchemix. Now, ALETH is depegged pretty, down to about 90%. So it's got a medium risk factor in my opinion there, whereas RETH to ETH is a low risk factor, especially because these are very much more blue chip in comparison to Alchemix assets. And the TVL on this specific pool is under $10,000. This probably is a medium to high risk pool, though it does have a very high APR on this. You would want to watch this pretty consistently, and you'll have to factor in that depeg, as it does change pretty drastically, surprisingly, against the Ethereum price. But then there's also this Wrapped-Matic to Aave pool, and this is on QuickSwap on Polygon, which I don't do a lot in Polygon, but I did find this as I was searching through Crystal the other day. So if you go to Crystal and then you go to Explorer, it actually gives you some pretty great pools to look at. And I believe I found this by just searching through here. Let's see if I can find it again. Let's go to the Polygon chain here. I think I was just switching through the different networks to see what was available. And let's see if it's even still here. Yep, we've got 686% on Wrapped-Matic to Aave, which these are pretty blue chip, guys. I mean, the only thing that I might actually want to look into more than this is this USDC to Link, as I think Link is a better asset than Aave is, just as a overall play. As noted here, these are blue chip. I don't think they consider Aave token a blue chip token. So that's going to be something to think about. A little bit lower risk to get into Link than it is to get into the Aave token. But Wrapped-Matic could run and Aave could run. In fact, if you look at the prices on these guys, let's look up Aave real quick. It's kind of at the low of its range right now. It has taken, okay, it ran up super hard. Okay, so this has actually gone up 6% in the last 24 hours. I was looking at it yesterday when it was down here. So if I had gotten into this pool, guys, we'd actually be up a decent amount, 6% in 24 hours. It's pretty great. That would have boosted the underlying and then also gotten us that 600% APR. But also let's look at what Matic is doing. So wrapped Matic on the Polygon chain. Yeah, so we're up a little bit, 1.6% in the last 24 hours, but overall that pool would have gained for me not only in APR, but also in the price appreciation. I do think Matic is going to probably run again. It's just one of those larger tokens. I don't have a huge amount of conviction about the Polygon chain itself, but they are going through a rebrand right now. So there could be some upward momentum because of that. And I think they're trying to be the liquidity layer for a lot of the EVMs. And I think that could be a really great narrative for them, but it's yet to be determined if that's going to work. So I wouldn't mind holding Matic at all, especially under $1. I think it's got a decent run to go. We're not anywhere near all-time highs. I think all-time highs were over $1.50, maybe even $2. In fact, I think I could probably look that up on like CoinGecko, but I'm not going to spend the time right now. But great pool to be in if you're looking for some high APRs with some relatively low risk. I said medium risk here. It's definitely lower to medium rather than this Alchemix pool. So do look forward to going through more pools in the future with you guys. But honestly, what I really want to do is talk about now is this yield farming course. Now, this is a co-op that I've joined up with in the last couple of weeks. These guys are amazing. They've been doing this for some time now and just recently launched a 49-day challenge. This 49-week challenge is 49 weeks to freedom, and it's basically onboards you. So if you've never yield farmed before, it's a great place to start. But also if you have yield farmed, this is a community that you can be a part of that's going to give you not only research that all of the community is doing, it'll also give you some education, how to on-ramp and off-ramp in different applications. I think just getting together with like-minded people is also very valuable. This is a paid subscription of $152 a month, but that's about $35 a week, guys. Let's just say that you have $1,500 in your yield farming portfolio. You would just need to make 10% or more per month in that portfolio in order to pay for the subscription. And as you can see, guys, over the last couple of weeks, I'm actually making closer to, 10% 2 weeks ago, 23% this week. But our goal is to get you about 5% every single week on average. That should get you well and above your entry fee if you have $1,500 or more to put into yield farming. I'll leave a link in the description below for this 49-week challenge. Now, one other thing is if you want to do this completely on your own and only pay a one-time fee of $49, I do have this bootcamp that gets you crypto passive income basics up to speed, and this is focused on yield farming and exactly what I do. In this bootcamp, I start you out at the very basics of moving some funds from a centralized exchange onto an on-chain wallet, and then we get into the concepts of your yield farming. I'll show you some of the research that I do in order to find the pools that I get into. And then in episodes 9 and 10 of this 10 video course, I show you a couple pools to get into to start getting a return on that $49 investment. All right, with that, guys, thank you so much for watching. Make sure to like, subscribe, hit the notification bell for more content just like this. Let me know in the comments what you'd like to see in future videos. If you have any questions about the pools I'm in, I'm happy to answer them at any time in the comments below, as well as if you've got any pools that you think I should look at or you'd like me to look at, make sure to leave those pools in the comments below, and I may do a video about those guys in the future. So thank you so much for watching. Have a great week. God bless.